Welcome. The topic today, which we are going to see, is the circular flow of income. The circular flow of income is a picture of market economy in action. Every macroeconomic activity in a country can be better understood with the help of circular flow of income. In macroeconomics, the concept of circular flow of income plays a very important role. Now, let us see what is the meaning of circular flow of income. It is otherwise called as the circular flow of economic activity. It is the connection or linkages between different sectors of the economy. The linkages between different sectors can be better understood with the help of the diagram which is rotating here. There is a circular flow of income between the two sectors, that is the household and the business. There is a flow of income between these two sectors in an economy. The circular flow of income can be clearly understood with the help of circular flow models. The circular flow model demonstrates how money moves through society. Money flows from producers to workers as wages and flow back to producers as payment for products. In a country, economic activity itself is circular, which starts from major exchanges such as flow of money and flow of goods and services. The circularity in economic activity provides a starting point for understanding how the price mechanism works in the market. There are various types of circular flow models. They are 2-sector, 3-sector, 4-sector, and 5-sector. In 2-sector, we have household and the industries. In the 3-sector, the government sector is included. In the 4-sector, the financial sector, that is, the banking, is included. In 5-sector, we include the external sector, that is the foreign. So every country has import and export with other countries. So in the 5-sector model, the household, the industries, the government, the financial sector, and also the foreign sector is included. Today, we are going to see the two models, that is the 2-sector model and the 3-sector model. The various determinants of circular flow model are the household, industries, banks, government, and the foreign sector, that is the external sector. With these determinants only, the circular flow model can be studied where there is a interlinkages between the flow of income in all these determinants. Now let us see the 2-sector model. The 2-sector model is a very simple economic model which describes the circular flow of income between producers and the consumers. The producers belong to the industries and the consumers belong to the household. That is, they are the people of the country. The household sector. It is a person or group of people who spend their income. They spend their income to buy the goods and services from the market or from the producers. They also supply different factors of production to the industries. They also act as the consumers in the market. The business sector. The business sector is an organization that produces goods and services for sale. They sell their goods and services to the consumers. The firm also gets inputs and raw materials from households which they use for the production process. They also produce goods and services and supply them in the market. Now, the interlinkage between the household and the firm can be studied with the help of this flow diagram. Here we have the two sectors, that is the household and the firms, otherwise called as the industries. The firms produce or provide products to the households. They sell their goods and services to the household. The household spend their income to buy the goods and services or the products from the industries. The households also provide factor services to the firms. The factor services are the labor, capital, entrepreneur, and the land. These are the factors of production through which the industries produce the product. For these factor services, the industries provide factor income to the households. The factor incomes are the wage and the salaries, interest, profit, and the rent. The wage and salaries are paid to the laborers for providing the factor services. The industries also provide interest, they also earn profit, and they also pay rent. Through this, there is a flow of income between these two sectors, that is the household and the firm. Now we'll see the three-sector model. The three-sector model is a closed economy model because in this model, we are not including the financial sector as well as the foreign sector, that is the external sector. In three-sector model, we have the household, the industries, and the third added is the government sector. The government sector plays a very important role in the development of the country. So therefore, in this three sector, we are including the government sector to study the circular flow income model. The government of a country earns income and makes expenditure in the society. The government collects taxes from the household and the industries and provide resources and services to the people. By collecting the taxes, it provides transfer earnings to the households and subsidies to the industries. By collecting the taxes, it provides essential public service to the society. So it provides essential public services to the society. By collecting the income from the household and the industries, the government sector makes expenditure in the society through which there is a development in the economy. This is the model of the three-sector circular flow. Here, the government sector is added. Already we have the household, the industries, and the third sector which is included here is the government sector. Now, the household consumes or spend their income to buy the goods and services from the industries. They also provide land, labor, capital, and entrepreneurial ability to the industries. With the help of these factors of production, the industries produce the commodity. So, they provide the salaries, wages, rent, and dividends to the household. The industries belong to the product market and the household belong to the factor market. Now, the role of government here is it collects taxes from the people and also from the industries. It collects personal income tax from the people, that is the households, and corporate income tax from the industries. By collecting these taxes, it generates revenue in the economy to make expenditure in the society. The government sector provides transfer payments to the households. The transfer payments are the unemployment benefits, pensions to the household sector. It also provides subsidies to the industries. To encourage the growth of the industries in an economy, the government provides subsidies to the industries. In this way, there is a circular flow of income between these three sectors, that is the household, the industries, and the government, where the government sector plays a vital role in generating income and also expenditure in the society. There are various leakages and injections in the circular flow model. The leakages reduce the flow of income in the circular flow model, whereas the injections increase the flow of income in the circular flow model. The leakages are in the form of savings, tax payments, and import of the country. These reduce the flow of income. The injections are in the form of investment, government expenditures, and exports of the country, which generate the flow of income in the circular flow. Therefore, these leakages and injections play a very important role in the circular flow of model. The circular flow of model gives us the clear picture of the market economy. The circular flow helps in calculating national income through the flow of funds. It provides a complete picture of all monetary transactions in the economy. The circular flow of money helps the government in evolving a strategy for the promotion of exports and reduction of imports. It creates a link between the producers and consumers in the market. The circular flow model explains the importance of monetary policy in establishing the equilibrium between saving and investment. The study of circular flow highlights the importance of fiscal policy in an economy. Therefore, the framing of monetary policy and fiscal policy is done through the circular flow models. The study of circular flow of income and expenditure is of great theoretical and practical importance for studying the functioning of the economy. Thank you.